Have you ever looked at a cryptocurrency chart, seen a token locked in a prolonged falling trend with technical sell signals flashing across multiple time frames, and yet heard a group of passionate investors claiming it is completely undervalued? It makes you wonder if they have spotted a diamond in the rough, or if they are simply trapped in a sinking financial ship. Today, we are diving deep into one highly unique asset setup that is causing exactly this kind of intense, polarizing debate across the decentralized finance and real-world asset tokenization community. We are looking at Rockwell Automation Tokenized Stock, trading under the ticker symbol ROKon, an on-chain product backed by the Ondo ecosystem, currently sitting at a distinct market ranking of around number 3030 on prominent global digital asset indexes. This tokenized security has been capturing a massive amount of attention from data-driven day traders and macro-focused Web3 allocators. Over the last 24 hours, the price has remained completely unchanged, showing 0% volatility to hover flatly right at the $483.07 mark. This sudden stagnation after an aggressive macro downward shift has left the market completely divided down the middle. Is this flatlining price action a sign that massive institutional accumulation is happening quietly before an explosive recovery? Or is it a classic value trap designed to drain the remaining capital from unsuspecting retail wallets? Before we break down the underlying tokenomics, the on-chain liquidity depth, and the momentum indicators of this specific high-value yield-bearing token, make sure you hit the like button right now, subscribe to the channel, and it is absolutely compulsory that you leave a comment down below telling me if you are currently holding a ROKon or if you wouldn't touch it with a 10-foot pole. Your comments are what keep this channel going, so do not wait. Leave that comment right now. To truly understand why the Rockwell Automation Tokenized Stock is causing such a massive stir among speculative traders right now, we have to look past the ticker symbol and analyze what this project actually represents and why it has suddenly stepped into the spotlight. ROKon operates as a tokenized real-world asset product issued via the Ondo platform, engineered to represent fractional shares of Rockwell Automation Inc., a global industrial automation and digital transformation giant based in the United States. Unlike standard crypto meme coins or layer 1 utility tokens that rely entirely on network traffic and viral speculation, ROKon is fundamentally tethered to a legacy corporation that builds industrial control systems, software, and robotic infrastructure for manufacturing plants worldwide. In the broader cryptocurrency space, these types of products are referred to as real-world assets or tokenized securities. It is in sharp focus right now because it represents an experimental bridge between traditional stock market valuations and decentralized on-chain liquidity pools. However, despite the backing of real-world equity, the asset finds itself in focus today because of a severe disconnect between the underlying company's stable operations and the high volatility environments of decentralized markets. When a tokenized stock experiences a sustained price decline within crypto protocols while trading volume goes completely quiet, it triggers immediate red flags for long-term investors while presenting unique structural arbitrage plays for high-risk scalpers. The market is watching ROKon right now because its stabilization near $483 represents a critical crossroad for on-chain institutional integration. When we transition over to the technical analysis, the charts paint an incredibly tense and delicate picture for ROKon. The primary macro trend direction for the tokenized asset has been dominated by a clear, persistent downward slope over recent weeks, characterized by a steady sequence of lower peaks and declining valley floors on the hourly and daily timeframes. This consistent lack of upward momentum has triggered multiple automated technical sell signals, as short-term moving averages have crossed cleanly beneath the longer-term historical baselines, confirming that institutional and algorithmic sellers have been dictating the pace of the order books. However, as the price stubbornly consolidates at this $483.07 mark, the asset is testing a massive psychological and structural support zone. This near $500 region is a strict line in the sand for the remaining buyers, representing a zone where historical buying interest previously stepped in to absorb sell orders, creating a temporary floor for the market. If this support zone holds over the coming days, it could lay down the necessary foundation for a significant relief rally, or at least a prolonged period of horizontal accumulation. On the flip side, the overhead resistance levels are incredibly dense. Any sudden push upward by the bulls will immediately run into a wall of selling pressure from trapped traders who bought it at higher levels and are just waiting for a minor bounce to exit their positions at break-even. Momentum oscillators like the relative strength index are hovering deep within oversold territories, which is exactly why some market participants are screaming that the tokenized asset is fundamentally undervalued. But veteran traders know that in the world of crypto-wrapped stocks, an asset can stay oversold far longer than retail accounts can stay solvent, and short-term weakness remains the dominant narrative until a massive spike in on-chain trading volume confirms a structural trend reversal. When you look at the broader ratings and market signals available for the Rockwell Automation Tokenized Stock, the automated data streams and liquidity health scores lean heavily toward an attitude of extreme caution. In this specific niche of the decentralized asset market, you do not have traditional crypto tracking platforms giving classic buy or hold ratings, but you do have decentralized smart contract scanners, cross-chain yield tracking tools, and historical consensus algorithms analyzing the health of Ondo's tokenized liquidity vaults. Right now, these independent technical ratings are pointing firmly toward a sell or strong sell bias because of the total breakdown of key historical market structures. The negative signals are compounding as blockchain ledger data reveals that early cross-chain yield farmers and large treasury addresses are slowly but surely unwinding their exposure or shifting their capital out of automated market maker pools and back into pure stables, leaving the remaining retail base to absorb the daily lack of trading activity. The short-term outlook for ROKon remains highly defensive because the asset lacks a strong, independent marketing or product catalyst within the Web3 ecosystem to break it away from general market conditions. When major crypto-based assets like Bitcoin or Ethereum experience sudden liquidations, specialized real-world asset protocols tend to suffer from a sudden drying up of market maker bids. The flashing red lights on the technical scanners are a clear warning to day traders that stepping into this chart right now carries a high probability of loss. Yet the highly speculative crowd continues to ignore these negative signals, betting everything on the hope that a surprise corporate earnings report or an unexpected regulatory expansion from Ondo will completely rewrite the token's technical reality overnight. This brings us to the ultimate question that is tearing community forums and trading groups apart. Is the ROKon tokenized stock genuinely undervalued at these current prices, or is it a textbook value trap designed to lure in naive buyers? The argument for it being deeply undervalued rests heavily on the fundamental strength of Rockwell Automation's legacy industrial footprint. Proponents argue that because real-world automation, smart manufacturing, and industrial software systems are essential for the ongoing global technological transition, a tokenized asset representing this corporate equity must eventually recover its premium valuation. They view the current $483 price point as an incredible discount, arguing that the token is simply resting at an absolute cyclical bottom before compelling. A value trap occurs when an asset looks remarkably cheap simply because its price has experienced a massive crash, but the market fails